Hello friends, welcome back. In this quick demo, we are going to Ninja Trader and we're going to use this from their ecosystem, a free indicator. They have hundreds of them, settlement lines. And we are putting it on an hourly chart right here, 60-minute. Now, it is critical to have an eye of the settlement price. It is clean visibility on the hourly chart. If this is the chart you're trading, this is all you need actually if you know how to trade the bars. So there are banking bars involved here, which we call banking bars, and the banking bars also has reflective points. It also have a market squaring structure. If you study Gann square or you observe the nature square, Mandela squares, lots of squares, like so many kinds of squares, but we can drive all this information where market is going just by looking at the banking bars. So what this settlement price does, it is the price at the closing, and that is projected when the market opens again. So that is where this activity settled. This activity settled. And what we can do is we can keep an eye on the last few days of settlement activity. For example, this was settled. I just have few days of data loaded. Next day, market opened here after the cash settlement. Mark to market has taken place. Now we are heading to trading a new session which opens at 6, depending on where you are. And there it is. It goes back to retest it next day at noon time. It went to retest the settlement open. Got pushed back. Now this day settlement took place. So when the market is going below settlement, first of all, we will try to take shorts, and it is going to stop at certain point as well. What you can do a standard deviation of the price, or you can square the price here and find the squares, or you can from here use the frequencies as we discussed. So if I take a drawing tool or a measurement tool, let's do this one. Wrong one. Let me change that. So let's start from this 13, and let's say we go to the frequency. $45. Okay, so let's go to 70. So 30, 40, let's add another 45. Now 45 is just, I'm using a price range, but you need to be able to calculate that properly. So let's assume the frequency for at this current point of operation is 45. So what we can do, we can look at adding lines of this settlement. Okay, now I'm just taking this as an example because the frequencies may not be 45. Frequency may be running in the system because they keep shifting and contracting, and they're just coiling. It coils, as we have learned. Look at this location, 369 YouTube channel, and find out the frequency, how to create the frequencies and how to find those frequencies. So you may find, okay, 45 is one frequency, maybe 60 is another one. So let's go from 50 to 10. So I'm just giving example. So if that is a frequency, you can offset it from the settlement price. And it goes there. And now these frequencies, as I said, there are 4 frequencies we track. And here it is. If 60 is the one, you can just see. If 69 is the one, what we do is 69. So if I go back to 69, right here. So this is one of the frequencies which is active right now, and it can change. So you can offset this from the settlement price. And there it is. Every instrument has its own frequency. And it's very easy to calculate. And if you have not seen those videos, I highly recommend that to see that. And how we do it is we look at these blue lines we print on Twitter. All right, and we go back 4 months and we find out the maximum distance between these blue lines. Okay, and that is how it is done. And we went through months and months and 3-4 videos, a few hours, how to build them and then how to test them. Okay, so in this case, this visually I have to go back 4 months. I'm just gonna look at this guy, and I think this is where the market is going to vibrate. So I put it at the highs and lows, and I also put at the other blue lines. So if I put at the low, you see market went there and came down. Now this is stock of Apple. And then there are 4 frequencies I talked about, right? This is how it works. And look at from the top, it went back to the same place. Now we're gonna frequencies also, as the laws of Tesla says, doubles. Now this is one frequency we're dealing with. Okay, there are multiple frequencies. This frequency, we put it from here, went back to this level, market reacted harshly, and then we put it at this level, market went here, went to not much, $1.50, which is okay. There's another frequency running as well. So you got the idea what's really going on. Where is market going next? So this is how we find the frequencies, not to distract our main topic of discussion. Settlement is a good approach to looking at the price. And then the second thing I said, if you know your frequencies, if you're below the settlement, it is trying to reach a certain frequency. It can reach the same day or next day. So at these points, you trade and take a bias. So from here, settlement, the price was 69, projected 69 frequency, it came here. From that day, just take longs only. And here is the banking bars, structures showing up, market makers are showing up right here. And these are our entry points. So what we can do is we can also let if market is below settlement, don't do it. If it closes above, which it does right here, above, giving us a very good direction that this DNA structure of the market maker is going to hold, and there it goes. Now this is from this bar. From this bar also, it is just holding. So it came back to retest it, broke down. This settlement is posted here this day, right? And it's still going down, but they're all trying to come to this center point, which I just showed you. And then what happens? Broke above, came to retest this settlement price, came back to retest this settlement price. Do you understand? I think it's pretty straightforward. And now, put this frequency on this first settlement we found, and it goes to this and bounces back. Then we go to this next settlement. Now you see why the market is trying to reach at this point. And this is how we structure it. Now at this point also, you can see settlement, it hold and it never closed below the settlement price, giving us another evidence that market wants to run up higher. And it goes up, gets rejected because there may be something else settlement we didn't print below that. So market is jumping, and then what happens? See the tails coming up at the settlement. Now this is also a sideways action of. This is how the profiles are created, by market going sideways, but it is happening in the settlement. It's holding at the settlement where we started from. Rejected from settlement, 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 retest, settlement, retest, settlement sitting here, holding, two settlements coming up at the same spot. It's going to move aggressively and it takes off on this direction, which is okay because you can see the prices are holding above the settlement price. So it's important to keep this in mind that this tool is free and you can put it on hourly chart. Thank you very much.